Mike Santoli is absorbing all of this and hopefully can bring some clarity on this Monday morning. Hey, Mike.
Well, we'll see, Carl. I mean, obviously, you could take your pick in terms of what is now weighing on the markets. I would view it as a broadening out of the correction process, right? We had a very kind of selective surgical pullback up to this point where it was the overheated tech stocks that were taking the brunt. They're outperforming today. Everything else is catching down. So it's a broadening out of this pullback. And one thing you said, Carl, is relevant, which is all we've done is unspooled August's rally right now. So we can talk about levels and percent declines from the highs, pushing 10% on the S&P. But that doesn't even get you back to, let's say, where we were July 1st. So that's a significant thing to keep in mind in terms of just how much you're kind of cutting into muscle here. So, yes, seasonals, technicals, looking a little bit wobbly. You still don't see a lot of tremendous macro stress in the credit indicators. The longer-term trends are roughly intact. It's much more about what risk appetites do in this lead up to the election when you have lost a little bit of traction in the cyclical recovery expectations just because of people clenching up ahead of a potential increase in COVID cases and maybe some lockdown measures. So I think it's mostly about rationalizing all those things together in a pretty weak seasonal moment for the market as we, I think people felt a little bit too good, basically, about the character of the pullback coming in. It seemed very virtuous. It seemed like all the stuff that went crazy in August was all that was down. And now maybe you have to generate a little bit more concern for this to run its course, guys.